because if you have been an AutoChartist user for any length of time and you've been over to the standalone platform, you know that we separate completed patterns and emerging patterns on the platform, on the web-based platform, and therefore you have one set of alerts that's focused on those patterns that have completed and broken through versus those who are still under development. So I'm kind of reflecting that view on my charts. Does anyone have any questions on that? All right, so that's the first part. And by the way, having both the MT4 plugin, one is not really replacing the other. There's something that you can do in unison, because obviously the sorting capabilities and the scanning capabilities of the standalone platform are more robust than that of the MT4. The MT4 really allows you to focus in on a pattern and not have to go through the time of replicating what you see on your standalone to your chart. It's done for you, which is quite nice. But if you're looking for more pattern results, obviously I recommend keeping the web-based platform open alongside the plugin of your MT4. And some of the broker partners actually have ways that you can access this pattern from right within your MT4. So a lot of broker partners have gone an extra step to incorporate the standalone into the MT4. So with that in mind, when we're talking about the standalone, what this will allow me to do is go ahead and discuss what non-trending chart patterns actually are. And then we'll go ahead and take a look at the text window here, and we'll address any questions that have come in. So non-trending chart patterns, again, the subject of our discussion today. In terms of the pattern recognition capabilities of AutoChartist, remember, we're not just talking about chart patterns anymore. AutoChartist can scan for Fibonacci patterns as well. I know not as many people are necessarily as familiar with Fibonacci patterns. We have actually videos and articles on Fibonacci patterns so you can better understand what it is that they're looking to identify. One book that I had read and I find is an excellent resource for it is a book written by Larry Pesavento, and this is about Fibonacci patterns exclusively. Larry Pesavento, it's a large but soft cover book called Fibonacci Ratio. Let me go grab it off my bookshelf here. Okay, the book is called Fibonacci Ratios with Pattern Recognition. Fibonacci Ratios with Pattern Recognition. And again, it's written by Larry Pesavento. His last name is spelled P-E-S-A-V-E-N-T-O. And the book is published by Traders Press. So you could probably go right to their website if you wanted to pick up a copy. I know it's available at a number of online bookstores. Okay, so again, Fibonacci patterns will be a topic for maybe another of our presentations. Again, it's P-E, this is some questions about the spelling, Pesavento. Like it sounds, it's an N. N is in Nancy. Pesavento is his last name. Okay, so non-trending patterns. What are non-trending patterns? Quite simply, we're really focusing on triangles for the most part. That's going to be the common non-trending pattern result. And in addition to triangles, rectangles, head and shoulders, if the neckline is not too angled steeply, okay? Sideways chart patterns can also include double top, triple bottom, triple bottom, pennants, and I'll throw flags in there. Let me for a moment mention flags and head and shoulders for as it pertains to our discussion here today. So in terms of non-trending patterns versus trending patterns, head and shoulders and flags kind of fall into this odd little pocket where they can be traded and found in trending and non-trending environments. Now, how do you identify a trending versus non-trending environment? We talked about the patterns now that are trending versus non-trending. So it's basically, it's to tell you that you're basically looking at every single pattern type except for, with the exception of wedges and channels and head and shoulders with steeply angled necklines. Everything else really can be viewed as a potentially non-trending pattern. Okay? Now, how do you identify a non-trending market? Because if I'm going to trade a non-trending pattern, ideally I should be trading that within a non-trending market environment. There are two types of non-trending market environments. AutoChartist will help you identify them. I'll show you the way I also use AutoChartist along with some of my own tools to identify non-trending market environments. Because after all, we are utilizing the MT4 platform, so there are some other tools we can overlay on our charts in addition to all the great information that I'm getting from my AutoChartist MT4 plugin. It's a custom indicator, by the way. Okay. Custom indicator would be the MT4 lingo for the plugin. So AutoChartist has a tool called the initial trend. Any of you that have seen me speak about AutoChartist know that the initial trend was probably the most important aspect of the platform beyond the automation of the recognition and the alert of the patterns. Because this is where I realized, and this is where I gained so much respect for AutoChartist, because it dawned on me that they got it. AutoChartist got it. They understood that part and parcel with identifying chart patterns comes a responsibility, I feel, of letting a trader know what type of environment the pattern is occurring in. Nobody up till then really had made that part of their analysis. Nobody really talked about it. People talk about congestion patterns and trending patterns and so forth, but they never really said if a congestion pattern happens in a trend, there might be a different approach to it. That's always been my, if there's anything that I hope that I get across to traders anytime I speak with them, it is this: understand the underlying market psychology, which is really just another way of saying understand the market's trend before you choose a strategy. Well, in this case, our strategy is going to be the individual patterns themselves. Each pattern offers 2 to 3 strategies that can be employed depending upon the underlying trend, the environment that this pattern is occurring in. That is very important, okay? That is going to be the touchstone, the undercurrent for everything that I'll ever talk about. Is everyone clear on that point, that your patterns must be in harmony with the psychology of the market? I'll show you how to do this in a moment, but I really need you to, just for our time here together today, just buy into that, believe that while I'm teaching you, because that's really, again, if I've lost you there, probably everything else I'm going to talk about will be less meaningful. So again, I hope everyone believes this truly, which is the chart pattern really must be in harmony with the underlying market psychology or market trend. Okay? And of course the trend is reflective of the psychology, so it's really one and the same. Having said that, non-trending patterns must eventually be traded in a non-trending pattern environment. The initial trend is the strength of the trend prior to the pattern formation. Okay, this quality indicator really is, in my opinion, one of the most important. They're all important, but this one is pretty much the first step or the first filter that you can employ to take all these different results and narrow them down into which patterns you're likely to be emphasizing. Okay? Having said all that, how do you read the initial trend? Hopefully I've emphasized just how important it is. The initial trend is a 10-bar reading. 1 to 3 bars indicates typically a narrower sideways range, lower volatility, and is usually a sideways market, or at least the early stages of what could be a sideways market. When the volatility increases, typically the price range increases, as will the reading of the initial trend. So a more volatile sideways market can be identified with a 4 to 5 bar initial trend. So we have two types of sideways markets, don't we? We have the lower volatility, narrow ranging sideways market, and then we have the higher volatility, wider ranging sideways market. And if anybody here is a fan or somewhat knowledgeable about Charles Dow and what posthumously was then coined Dow theory, all his philosophies and approaches. If you're familiar with Dow theory, you know that this is really part of what he calls the market phases or trends, in which you have an accumulation market, which is a consolidation market, and a congestion market, which is that wider ranging, also known as distribution. And again, the difference between the two is the volatility and the trading range. That's the difference between the two in terms of their visual characteristics. Why is that so important? Why is understanding a 1 to 3 initial trend reading versus a 4 to 5 initial trend reading so important? When you have a wider, more volatile price range, and let's head on back over to the MT4 platform. When you have a wider, more volatile price range, I'm not saying that you won't get breakouts or breakdowns.